Hello, my name is Brandon Reed, and this is my financial analysis project. I decided to do my project on the company Apple, and this is my review of their overall financial information on our trend analysis. Apple Inc. designs, manufactures, and markets mobile communication and media devices, personal computers, and portable digital music players worldwide. The company also sells related software, services, accessories, networking solutions, and third-party digital content and applications. The company currently has over 92,600 employees. Apple is the most valuable company in the history of mankind, valued at over $600 billion. After reviewing Apple, I felt that I would choose Microsoft as a comparison company. Microsoft has also at one point been one of the most successful companies in the world, so I thought the two companies would be good to analyze together. Next, we will review the current and quick ratios. After reviewing the current and quick ratios of Apple and Microsoft compared to the industry averages, Apple is closer to the industry averages for both compared to Microsoft. The current ratio usually is used by creditors to determine short-term solvency. Apple is on par with industry average. A high current ratio could mean that the company has a lot of money tied up in non-productive assets, such as excess cash or marketable securities. Or perhaps the high current ratio is due to large inventory holdings, which may become obsolete before sold. Microsoft's current and quick ratios are high, which shows that the company is not heavily dependent on inventory for short-term solvency. Next, we will take a look at total asset and inventory turnover ratios. Apple's inventory is sold out and restocked way more than the standard for the industry. The company sells their inventory quickly, showing that their products are extremely popular, or the company keeps a low inventory on hand. Microsoft's IT ratio is lower than industry average. Based on the industry average for total assets turnover ratio, both Microsoft and Apple are below industry average. Each company is not getting as much business based on the total amount each company invested. Industry average for the inventory turnover ratio is 18.16. Apple shows that their inventory is sold out and restocked way more than the standard for the industry. This shows that the company is holding very low levels of inventory and selling all of it quickly. Microsoft had inventory turnover ratios lower than industry average, showing that they may be holding inventory levels a little high and not selling inventory quickly enough. Next, we will look at net and operating profit margin. Net profit margin for each company is very high compared to industry averages. Both companies operated the last 3 years with profit margins that were much higher than most of their competitors. This shows that the companies are gaining high profits on each product sold compared to the industry average, which means the companies are very popular and successful. The operating profit margin for each company shows that the company is operating well above industry average. This shows that each company is operating very well before interest expenses are considered. Next, we will look at return on total assets and common equity. Apple and Microsoft are each operating well above industry average for return on total assets. This means that each company has a high net income and the company must have low or no interest costs. The return on common equity for each company is very high compared to the industry average, which shows that stockholders are gaining a higher return on their investment with each of these companies compared to the industry average. It shows how successful each company truly is. Next, we will look at price and earnings, and price and cash flow ratios. After reviewing the P/E ratio for each company compared to industry average, both companies operate right around industry average. Apple had a dip in 2013 but recovered in 2014. When reviewing the price/cash flow ratio, I noticed that each company operates above the industry average. This shows that growth prospects are below average and its risk is above average, or both. Overall, Apple is an industry leader and is the most valuable company ever. A great company to purchase. Apple would be a great company to purchase if another company could afford it. The company has great brand loyalty and is extremely profitable. Overall, Apple is a great company that any company would be lucky to acquire. They are truly leaders in all facets of their industry and have enjoyed record-breaking sales and valuations.